Hello, hello.
Hi, can you hear me okay?
I can, and I can see you.
Great.
This is amazing.
Let me get
It's
some
working.
additional, let me get a little additional light here. I look dark. So there, is that any better?
You look good to me.
All right.
Perfect. Well, hi, everybody. It looks like people are actually jumping on and watching, so feel free to type in any questions you have as we go. But I'm Marisa Nelson. I'm a wills and trust lawyer in California, as many of you may know. And I'm here with John McAfee, if you want to give a little intro.
Sure. John McAfee. I'm a State Farm agent in Redwood City and also deal with California, but also with Oregon and Nevada.
Perfect. Awesome. So I guess we'll start with our quick little disclaimers here and then jump into some more information and questions. As I mentioned, I'm licensed in California. I am not your attorney unless we have signed an agreement, but I do welcome questions. We're going to share some general info today. And then I think John has a similar spiel he's got to give here real quick.
I sure do. So the information I'm going to present is going to be more general in nature. It might not be specific to your individual circumstance. All coverage is subject to underwriting, has to be approved by the company. And we're going to focus on California today, even though I am licensed in the two other states.
Perfect, perfect. Well, thanks for being here. So I invited John to join me today because we've worked really well together for a long time. I've learned a ton working from you and working with you, and I thought that we could share a little bit of information about kind of your work, what makes your way of doing business special, and answer some trusts and insurance questions today. So first I'll just say a little bit more about how we know each other. So let's see, I met you, it must be at least 8 years ago now, which is crazy.
Yeah.
We've been seeing each other almost every week since then.
Mm-hmm.
We are in a business group together. We share a lot of mutual clients, and I am also a customer of John's. He helps me with car insurance, renter's insurance, my IRAs, life insurance, anything insurance related. I bring it to John, and I know that he's always going to give me an honest, authentic answer and just make it easy, because even for someone who's comfortable with legal documents, insurance is a whole other thing, and it's just so much easier to get the information I need and narrow it down to the decisions that I need to make just talking to you first. So I really appreciate that, and that's one reason I'm such a loyal customer, and I know you do the same for my clients and our mutual clients as well. Let's see. So where did I want to go from there?
Well, I'll throw in, hey, I use you also for my estate planning, and you've helped my parents, and you helped me really tremendously navigate when I found myself as the executor of my aunt's estate, having to navigate that process after somebody had passed away, who didn't necessarily have all the paperwork in order. So I really appreciate your professionalism and the way you were able to help me get through that tough time. And, like I said, I love working with you and love referring you to.
Well, thank you. Yeah.
Yeah.
It's always great working with you in either direction. And I know that just like you make it easy for me, you make it easy for my clients and our mutual clients who an important part of what I do, as you saw on the other end of it, is not just setting up the estate plan, but funding it. And that part is so much easier when I have you on the team as well, because I know that part can be a little overwhelming for clients sometimes. And when you're involved, I just say, okay, everything's with John. Just go ask him about this. You already know what to do. If there's ever any little details that you need to ask me about, I know you will. It just makes it easier for us and the client. So that is amazing. Just business just flows and everyone is taken care of. So it's great.
Mm-hmm.
So let's see. So I wanted to ask you a couple of things I know you offer. So I talk a lot about pets and estate planning on here. So I wanted to touch just quickly on pet insurance, which I believe that you offer. Anything you want to share about that?
Well, State Farm offers, we don't have a proprietary product. We do offer a product through an alliance company called Trupanion. Our coverage that we offer, well, perfect timing. Our coverage is, it's actually very, very good. The problem with most things is you do get what you pay for. So a lot of times people, when they go out and they take a look for pet insurance, they're surprised by how much it actually costs. And it does come with a cost. Obviously, the lower your deductible, the higher the cost. The higher your deductible, the lower the cost. But generally speaking, when you look at the coverage options that we have available through Trupanion, we do offer a very comprehensive product that, you know, I think it's very good. It's robust. I have it for my own pet. And I do like it quite a bit, but I think, you know, looking around, making sure people understand what the product does or does not do for them is a good thing. But having pet insurance is a great way to ensure that, you know, God forbid something major happens, you can get it taken care of for effectively monthly premiums and a deductible. So it works out pretty well.
Yeah. I got pet insurance a few years ago after an older cat of ours that, you know, she wasn't old enough that we were expecting anything, but she started to have a lot of health problems, and within a week it was, you know, $5,000 worth of vet bills, and that there, you know, we didn't even have surgery or anything like that going on. So this guy and his brother are much younger, but I knew that I never wanted to worry about being able to cover that again. And so even if things add up over his lifetime to being that same $5,000 in monthly premiums, I would much rather spread that out over 10 years than 1 week.
Mm-hmm.
So it's a big relief to have that and know that, you know, vet care is expensive and we're covered. So that's a really great option that you have there. Turning to life insurance, that's also something that comes up a lot with my clients. You know, in the Bay Area, a lot of folks have substantial assets, others don't. It can be very unbalanced there. But even for the folks that do have substantial assets, a lot of times it's not liquid. You know, if the majority of your assets are in real estate, especially your home, if something goes wrong, it can really put your family in a tough spot to not, don't step on the keyboard, please, to not have that liquidity to pay the rent or the mortgage, keep paying the kids' tuition, that sort of thing. That kind of interruption can be pretty massive, and life insurance can fill that gap to make sure that the mortgage gets paid, the kids' tuition gets paid, without having to worry about going back to work like the day after or the week after, the month after someone really close to you passed away. So I see that makes such a huge difference, and I've seen for myself, you can make that so much more approachable because there are a lot of options, a lot to sort through, with anything from really like tens of dollars per month to hundreds or thousands, depending on what kind of coverage you want. And you really clarified those options for me when I was looking at, you know, what makes sense right now for my circumstances. So is there anything you'd like to share about kind of your approach to life insurance? Or, you know, I know you're somewhat limited in what you can say on here for this general talk, but what would you like to share about life insurance?
Sure. Well, so I'll just start with this. I've never met anybody who wouldn't buy more life insurance if they, number one, didn't have to pay for it, number two, didn't have to qualify for it, which tells me everybody understands that there's a need for it. In addition to maybe what you have at work, what you have in savings, the policy your parents bought for you when you were a kid, whatever. But having your personally owned life insurance gives you a great deal of flexibility to do a lot of different things. Obviously, if you pass away, your beneficiaries are able to have a ready source of cash available. They're not having to wait for something like a stock sale, or having to wait for like you mentioned, a loan to get approved to pull equity out of a home. The thing that a lot of people in this area have is they have very high incomes but they lock it up, right? They lock it up in a $10,000 a month house payment. They lock it up through RSUs. They lock it up into stock purchases, things like that, where they maybe don't have a ready source of cash available. You know, there's a statistic I saw that said that more than half of the population has less than 3 months of living expenses saved. And if you're in that group, if you're in that demographic, certainly having life insurance available provides your survivors with a way that they're able to then have the money available that, God forbid, you don't come home last night. They know that, hey, I can make the mortgage payment at the end of the month. I know that my kids' schooling is still going to go ahead. I know that we've got money to put food on the table. Life insurance comes in lots of different forms. As you mentioned, it can be inexpensive, it can be expensive. But having personally owned life insurance puts you in control. The other thing I'll add is in this area, a lot of people are going to have very good benefits at work. They're going to have life insurance as one of those benefits at work. The problem with that is you really don't control that. Your company controls that. So today, while you have this policy through work, that's great. But we're in that period of the year right now where everybody's getting their benefit statements and they're looking through them. The company could decide to increase the cost to you, that part that they share over to you because of poor financial results that the company's experiencing. If you're one of those poor, unfortunate 11,000 folks who just got laid off from Meta, you might find yourself suddenly without coverage or having to deal with COBRA coverage. COBRA is a program where you're able to take personal coverage with you after termination, but it tends to cost a lot more and it tends to be somewhat restricted. So having your own life insurance gives you that flexibility in times where there are gaps. Also, not to mention, as I said, I've yet to meet anybody who didn't feel that they needed more. It usually comes down to, how do I pay for it? And can I qualify for it? And if you have the income to pay for it, certainly that one goes off the table. Qualification is individual and it's going to differ company by company. But I do think that having personally owned life insurance is very, very important. And it's especially important when you look at estate planning, especially if you're going to do any kind of charitable gifting, any of those kind of things. I think it's a key component to that process.
Yeah, absolutely. And you mentioned a good point about employer provided life insurance. I often, most of my clients have some kind of policy that way. And then often it's like, well, I think I have it through work, but I'm not sure. I don't think we have anything else. And, jobs are not forever. Most of us don't work at the same company for long term, whether it's our choice or the company's choice. And you mentioned the layoffs at Meta, and, there may be more coming at other companies. And also, like, what if there's a gap? Like if you get injured while working or for some reason stop working, you lose that life insurance policy, but you've now got some kind of pre-existing condition. You've got something that makes it either difficult, expensive, or impossible to get a new life insurance policy outside of your employer at that point. You're probably going to wish that you had gotten a personal one and locked in that rate for 20 years or whatever before that chain of events made it impossible to, or eliminated a lot of options. So
yeah. I mean, I tell people all the time, you're never going to be younger and healthier than you are today. The price is only going up. So if you have the disposable income to afford it, if you feel that your health is such that you can qualify for it, my advice is to seek out somebody who can actually have a good informed discussion with you to figure out what kind of coverage you actually need and get some in place. Because as you mentioned, we're all a car accident away from not being able to qualify for it or, for God forbid, needing it. So that's why I think it's really important to get it done and get it done yesterday.
Yeah, absolutely. And like you said, like there's the whole range of options from super cheap term policies that you can lock in now to something with a little more return down the road. Lots of options, and you're great at walking through all those and making it clear to see how to make that choice. So awesome.
And I would just add that in this area, it's very typical for us to see people with 7 to 10 times their annual salary from a death benefit perspective. So if you are in certain companies around here, you might have 5 to 7 times as your employer provided benefit. Again, you're paying part of that, but that could be through your work. But still, 7 to 10, if that's the target, you're probably still short of that if you're just relying on what you have through work. The big advantage of the work one is typically you don't have to qualify. You just have to sign the form every year. The premium gets deducted out of your paycheck. You don't really feel it. So that's the big advantage. But again, if you change jobs, something happens where the company decides you're going to change jobs, or you become somewhat uninsurable for some other reason, having personally owned life insurance is a good idea.
Yeah. And even for the ones that you have to qualify for, like I went through that process with you and State Farm. It was super easy. Like someone came to my house, we did quick whatever testing they wanted to do, and then later we made some changes and we didn't even have to do that because it was within whatever time period. So it was super easy. Even with my busy schedule, it was not a big deal to qualify. So
Yeah, and I will say the younger you are, the easier the requirements are. If you're under 40, it could probably be a phone call and that would be
yeah,
it. A phone call just to verify some health information. If you're between
yeah,
40 and 50, you might need a physical exam depending on the amount of coverage you're looking for. If you're over 50, I'd say you're probably going to have some kind of a physical exam, and they're going to do height, weight, blood pressure, get a urine sample and a blood draw, something like that.
yeah. Hey, and it doesn't hurt to have a little more data too about your health, right? It can be some
It doesn't.
important information that you gain.
Mm-hmm.
So cool. Okay. Anything else you wanted to add about life insurance?
Just I'm happy to help. If anybody has any questions, I'm happy to answer any questions that they have.
Yeah, you're great at walking through it. So, all right. Well, should we turn over to a few of the more like practical details with? So you've set up an estate plan, and now what do you need to work through with your agent like you? So there's a few different policies that may be affected by setting up an estate plan. For the most part, there's not a lot you need to do, but let's see. I'll start with so an easy one for most people. It's not worth transferring a car into a trust, and if that's outside the trust, probably nothing to update with you. But occasionally, there's a super valuable collectible. I've had more than one client with $1 million Porsche. So those you definitely want to consider. Talk through with me or your trust attorney about whether that should be in the trust. And if you do transfer it to the trust, then you want to talk to John, or if you have a different agent, which I highly recommend John, but talk to him about what changes may need to be made to your car insurance policy. Definitely bring that up and see what needs to be done there. So what do you usually see there, John?
So just generally speaking, if you have a tangible asset like a home or a car, artwork even, that is owned by a trust, generally speaking, you want to make sure that your insurance policy, some way, shape, or form, recognizes that ownership interest that the trust has in it. For the bulk of the folks that I deal with, it's primarily the home is where we see this, where they have set up an estate plan, they have a living trust, and they've gone down to the county, they've filed the trust as the owner of the property. So what we do, because it's the owner occupied house, right? The person is living in the house, is we write the home in the name of, John and Jane Doe, but we put the John and Jane Doe trust as an additional insured on the policy. And this has a couple of effects. Well, first of all, it doesn't cost anything to do it. So it's super smart to do.
That's great. That's great.
But what it does is it extends the coverage from the policy to the trust. And people might think, well, why would a trust need coverage? Well, in the worst case scenario, your house burns down and unfortunately you're in it when that happens, right? And if you go up with the house, well, your estate now has a claim and is going to have to deal with this. It's a lot easier for your trustee to deal with the insurance company when there's a legal document in place, when the trust is specifically named on the policy, not to mention when the proceeds are finally paid out, they're going to be paid to the trust, where the trustee is going to already have a checking account established. It's going to allow for an easier flow of funds than if I make it out to the John and Jane Doe estate. Now you're having to deal with that problem. So having it just named specifically is very, very important. But practically speaking, let's look at liability that's associated with your home policy. So I'll just use an example. You have a home, you own the home, your house is in the trust, and you have a friend of your kids is over, just making this up, and the kid, falls down the stairs. But in that fall, a simple, childhood fall down your stairs, is severely injured, maybe is disabled, breaks their back, I don't know, something like that, and you end up getting sued. Your homeowner's policy is there. It's going to have liability associated with something like that occurs, and it would extend that liability protection to you. By also having the trust specifically named on that policy as an additional insured, it extends that liability to the trust. So you're able to get additional protection, again, without any additional cost. And I think that's particularly important. On top of that, I'll add, I also think it's very important that you talk to your property casualty insurer about getting a liability umbrella policy and how your trust should be mentioned on that. Because typically speaking, an umbrella policy sits on top of things like your house and your cars. And if a lawsuit is big enough, somebody might come after your trust. But typically, if your umbrella isn't named on that, if your trust isn't named on that umbrella, your trust won't have that umbrella protection. So you want to make sure you get the trust also included in your umbrella policy to really, really extend that liability coverage. I think it's very important to have that conversation with your provider.
Yeah, that's huge, and that's a really good point. That's umbrella coverage is something I hadn't really thought about until you brought it up to me. And I think I pay like a couple $100 a year to have that additional coverage and that peace of mind. And that's the kind of thing that you've caught for me at various times. Things I would like, if I come to you and say, hey, I need car insurance, of course you're gonna help with that. But you also catch those little things that I don't know to ask about, including umbrella policies and updating those where it's needed, right? Like if I come to you and say, hey, I've created a trust, what do I need to do? About those little things like adding that to the umbrella policy as well, which is huge for making sure the insurance does what you're paying for it to do. And a lot of times it comes down to that practical, like if it's not easy to update, it doesn't happen, and then it's not benefiting you to the full extent that it should be, right? So I think that's so super valuable that you catch those things and make that paperwork easy for your customers and for our mutual clients, because it makes all the difference for getting those in place. So yeah, that's huge. Okay.
Yeah, I mean, we're all on the same team, right? You, me, and the customer, we're all on the same team. We're all trying to make sure that what they have today works today. But when it comes time for tomorrow, when they pass away and the trust is set up so that beneficiaries receive the proceeds of the trust or the life insurance or whatever, that things pass as smoothly and easily as possible. And we're all on the same team. And it takes conversations, right? It takes the customer talking to me, talking to you, you and I talking together, just to really make sure that we've got everything protected and covered. So it's a good thing to have advisors you trust.
Yeah, absolutely. Advisors you trust, advisors you feel comfortable calling up real quick and saying, hey, what do I need to do about this? And like you said, like we're all trying to, like my job is to make sure that you're protected during your lifetime, that you and your family, that if something goes wrong, the process around that, the legal powers are there to make things go smoothly, and that really fits in well with what you do in protecting people from liability, making sure that if something goes horribly wrong, that the funds are there to make it go as well as it possibly can. And basically whatever nightmare you've had about kids falling down your stairs or someone you care about not coming home, my mom's had every one of those nightmares that you can think of, and I think a lot of parents do. We can't prevent all of those things, but it makes a huge difference to have the coverage in place to make sure that you have the advisors to help you through those things, the finances to make it as smooth as it can be, the legal powers to make it all work. So yeah, having a team working for you is amazing.
Yeah, it is. I mean, I think about my role in all that in particular. Insurance at the end of the day, it's risk transfer, right? You're taking a big risk, you're transferring that big risk to an insurance company, and there's a cost for that. But that cost is relatively small compared to the risk you're transferring. I mean, when we talked about umbrella policies, there's a reason those are written in $1 million increments, and it's because it's a big risk. But for a couple $100 a year, I mean, you could get $1 million of coverage really easy. And every company's going to have different rates. Every company is going to have, different coverage limits and underlying policy requirements. But at the end of the day, transfer the risk. It's worth the minor expense that you're going to pay in order to do that. So, yeah,
that's it right there.
Yeah.
All right. Well, I think we covered a lot of really important topics. Is there anything else you want to add before we wrap up?
I would just say that I think that it's super important to do periodic reviews as well. I mean, one of the things that I do, and you've experienced this, working with me, is kind of regardless if anything's changed or not, I want to talk to you every couple of years. I just want to make sure that if
Yeah.
nothing has changed in your world, you're aware of what the world has changed. And I'll
Yeah.
use the example of building costs in this area.
Mm.
Prior to COVID, the building costs were high compared to, say, Fresno, but they were reasonable. They are just astronomically high right now. And if you don't have your house insured right because you haven't reviewed in a couple of years, I think that's a misstep. It's
Yeah.
worth it's worth having a conversation. And the
Yeah.
same holds true for estate planning, right? If you
Mm-hmm.
acquire additional assets, your estate attorney needs to get that worked into the plan.
Mm-hmm.
If new kids come along, that needs to get worked into the plan. So I think
Yeah.
there's something to be said about, understanding, again, we're all on the same team. It's making sure that you're having periodic reviews, that you understand what you're actually doing, what the legal documents are saying, what the insurance documents are saying, what the coverage looks like, so that you can make sure that you are, you've gotten your boxes checked. So God forbid something terrible happens. You don't have to worry about the people that you're leaving behind. So I think it's
Yeah.
really important.
Super important. And you make it so easy to do that. Like just the quickest call, and you tell me yes or no, you're good, or hey, we need to look at these other things affected by that. You just know the answers so often, just immediately. And frankly, that's the only reason I get it done, is because it's so easy to just like, yep, no, we're good, okay, done. Like it makes all the difference. So
Yeah, I think that's good.
cool.
And also, taking a holistic approach. I think that's another thing,
Yeah.
because when you sit down with somebody's estate, you're not focused right here. You're looking at everything.
Mm-hmm.
And
Mm-hmm. Yeah.
frankly, from an insurance perspective, you should demand that of your carrier and your agent as well, because
Yeah.
it's really tempting to call up and say, I only want to talk about my auto insurance. I only want to talk about my home insurance. Talk about everything.
Yeah.
You're going to get
Yeah.
additional information, possibly some discounts,
Mm-hmm.
but
Yeah.
making sure that you're covered correctly, because gaps and overlaps are no good in the insurance world. So you want to make sure you're taking a holistic approach, just like you would with your estate planning.
Yeah, absolutely. I can't remember what kind of coverage you mentioned last week when we were chatting, but there's something you were able to, just by having that conversation about like what's going on in your customers' lives, you were able to add coverage and it didn't even raise their costs at all. And that's just a huge benefit that you provide, that I would never know to ask for that, and to get this extra coverage that can make a big difference, and not, whatever it costs is probably worth it. Like that's part of the conversation, right? Is like, is this worth it to me? But those cases where it doesn't even cost you anything extra, it's just a no-brainer.
Yeah. So, there are a lot of different options out there. Some don't cost anything. Some do cost some stuff. But I think having the conversation is the first step. It's a very important first step.
Yeah. Then you're informed. You can make an informed decision, decide for yourself. Like, does this fit my budget right now? What's most important to me right now? Huge.
Yeah.
Cool. All right. Well, you're in at Redwood City. I think you're at johnmcafee.com. Is that right?
Yep, johnmcafee.com is my website, and I think somehow or another my internet or my Instagram is linked to this. So hopefully people can find me there if they have any questions. I'm happy to help. Just have a conversation. It's a great place to start.
Perfect. Yeah. And as you probably all know, I'm Marisa Nelson, Wills and Trust Lawyer. I'm in San Carlos, marisanelson.com. We like to keep it easy for you. So feel free to reach out to either of us here or via our websites, or call, whatever works for you. Happy to answer questions. And thanks for your time today.
All right, great. Hey, it was nice talking to you. Thank you for the invitation.
Yeah, you're very welcome. We'll see you soon.
Okay, bye-bye.
Bye.